This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Happy Friday, everyone. Welcome back. This is Not Your Advisor with NYU Grad on September 19th, podcast episode 531. I just got back from one of my favorite restaurants, Torrisi. If you are in the New York area, I highly recommend it. It's very hard to get reservations. You have to use an app called Resy, R-E-S-Y. But if you can't get reservations and you have a smallish party like 2 to 4, I recommend walking in off hours like lunchtime, early dinner, and sit at the bar. They have the full menu at the bar. Excellent Italian dishes, not overcomplicated, but very high quality ingredients. It reminds me of our trip to Sicily and Palermo, where the food is just to die for. All of the ingredients are fresh. So I highly recommend it. It's Torrisi, T-O-R-R-E-S-I, or I-S-I, sorry. But I have an entertaining Friday episode because although the headline numbers is all-time highs, I feel like I'm at a shoe store and someone is trying to sell me shoes that are half a size too small. I think I'm going to, speaking of size, I'm going to name today's podcast Sam Altman and OpenAI have a big dick problem. And I mean in the most literal terms of Moby Dick. I think what might be happening in the coming days and weeks, maybe it wasn't a knee-jerk reaction today from the DeepSeek news, but I've been pontificating on the podcast that I suspect imminently some flavor of news from China and DeepSeek and Alibaba, that they have found a much more cost-effective way to deliver AI compute capabilities on lesser chips, lesser capital expenditure, lesser time, lesser data, lesser energy, all of it. I just had this suspicion because this is not my first rodeo. And this morning, Reuters, CNN, you can Google it. I'll link to it in the show notes. That type of headline dropped. So if you missed it, this report with some validation from objective parties is basically saying that DeepSeek was able to do what they've done with generative AI with a mere investment of under $300,000 to train the model. Whereas from as much as we can gather from publicly available data reported on Bloomberg, TechVerge, etc., ChatGPT and OpenAI have invested over $100 million plus for ChatGPT. I don't know which version, which flavor, but considerably higher investment. What I suspect this might, and whether it's true or not, remains to be seen. This could be complete propaganda for all we know. But if it is true, it's akin to like when mobile phones in cars used to be like a briefcase and there were thousands of dollars, and then now we have, I guess there's still $1,000. But now we have much smaller and much better performing phones for $1,000. If you are a CEO, CTO, chief future officer of a Fortune 500, Fortune 1000, Russell 2000 company employing 3,000 employees, whatever the case may be, it is within your scope of job description to investigate, hey, can I implement an enterprise AI solution that can get 50% of the output of a ChatGPT premium for 1% of the cost. Right? That's your responsibility. If you can do that and deliver that for your shareholders, you have to investigate it. So in the coming weeks and months, if this is true, this is going to be a ripple effect across the tech industry. What it actually might do in the near term is to slow down tech layoffs. What do I mean by that? Well, if it's cheaper to replace people, why won't they do it faster? So if you employ 3,000, 30,000, 100,000 employees in tech particularly, or enterprise software, etc., banking, lawyers, because you're able to implement and test AI for so much cheaper with a credit card versus, let's say 100 to 300,000 for your enterprise, you can do it for 50 grand, or I don't know, 10 grand. You may hold on to some of your employees for their built-in knowledge base, expertise, just so that you can almost parallel test cheaper AI against your existing worker base. So it may actually slow down layoffs. But eventually, if this works and people can roll out AI even cheaper than thought before, everyone is going to trip over themselves. And eventually, the layoffs will even be swifter. So this is something to really watch. I don't know if this news is really true. I don't really need to prove it, because eventually you will see the shares of CoreWeave, NVIDIA, Intel, Oracle, all the names, SMCI, move in sentiment if this is real or not. Today it was a nothing burger. I suspect we're still on the highs of this Fed rate cut news. But I want to also point your attention to NVIDIA. NVIDIA makes up 14% of the NASDAQ 100. One company makes up 14% of the NASDAQ 100. Since July, NVIDIA is up 1.7%. We have gone nowhere on NVIDIA, just trading sideways. We're right now grasping tooth and nail to the 50-day moving average. It barely budged today with all-time highs on, all indices. So, yes, the headline numbers are going to tell you everything is great. But there are a lot of warning signs. And look, I'm not your financial advisor. I'm not registered. I have no fiduciary duty to you. But I am moving mostly to cash. I have a percentage in the market that I'm trading, playing with on a shorter term basis. But if you're a paying subscriber, you know what my long-term signals are, when to be clear of risk and when to get very risky. So that's just my macro lens. Speaking of macro lens, I do have some news. I am honored to have been invited by Michael Green. Yes, the big giant robot, Michael Green, to attend as his guest for the Simplify Entering the Fall Thought Leadership Conference coming up September 25th next week. I will be there in person at the New York Stock Exchange. I have a little bit of imposter syndrome, not in the sense where I don't feel like I belong, but there are a few folks that I want to meet. It'd be an honor to just rub shoulders and elbows with. One being David Einhorn. So it will be an interesting day. I'm going to try to absorb as much as I can and take copious notes and report back to you all. But you can also register to the live stream, and I'll link that in the show notes. So if you want to register for it, take a look at it. I'm really excited for it. My wife doesn't let me out of the house. I'm just kidding. This will be great because it's almost getting closer to the birth of our baby girl. I will be taking a paternity leave once that happens. This will be probably one of the highlights prior to taking that leave. So big honor for me. Switching gears now, I want to continue from yesterday's discussion on yields.
If you're intrigued by what you've heard today,
Yeah.
if you're ready to challenge your own assumptions and explore a new approach to investing,
Okay.
then I encourage you to check out Not Your Advisor.
Explore their website.
Listen to a few podcast episodes.
See if their philosophy resonates with you.
You might just discover a whole new way of thinking about investing.
One that empowers you to achieve your financial goals.
And that's what it's all about.
Absolutely.
So until next time,
Yeah.
keep learning, keep questioning, and keep diving deeper